Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, today's date, Friday, May 23rd, 2014, the last trading day before the Memorial Day holiday. Remember, markets are closed on Monday. All right, now, what's going on with this market? Well, the market's doing exactly what we would have thought the market would do, which was floating neutral to higher. Right now, the S&P 500 is up 6.5 points, Dow's up 55, Nasdaq's up 20. So basically a third of a percent on the Dow and the S&P. Nasdaq's up about a 0.5%. So we see the Nasdaq leading again, which is interesting because this week we've seen the Nasdaq lead most days, which is contrary to what we've seen over the last few months. Remember, the Nasdaq's been hammered, the Russell's been hammered, biotech's been hammered, but those stocks are now bouncing back with a bigger vengeance than the Dow stocks, which have been kind of the safety plays. So essentially, if you look at safety, it's not as big of an issue for investors right now as they're rotating out of safety into the high risk, high beta stocks. All right, and again, if you look at the market over the last 3 days, you can see it's been a clear, crisp, classic trade into the holiday. And if you listen to the members and what I told the members in our videos here at InTheMoneyStocks.com, I said, listen, you got to expect neutral to upside bias going into a holiday. The volume's going to be lighter, as I said in yesterday's video and the day before to our members. Remember, the general public, when there's light volume, is going to buy the market. All right, now, light volume. Look at the volume on this market today. It's literally after midday, and then there's 25.4 million traded. So, I mean, that's ridiculous. We'll definitely be on pace to do the lightest trading day of the year. My guess is we'll do about 45 to 50 million today. But the key is you have to understand that light volume breeds upside because the institutions are the only ones that really would be sellers. They'd be net sellers without panic. If there's panic, then the little investor sells. But if there's not panic, the only person you're going to see selling is institutional traders and stuff like that, hedge funds. And the reason is because they're the ones that will see the future. All right, the average investor never sees the future. The average investor only sees the future after it arrives, and it's the present. So in any case, the point here is that if there's light volume and institutions aren't participating like today, the markets are expected to float up because the general public is just naturally positive. Remember, human nature, it is to be positive. And if you're not positive and you're negative, well, what do they call you? They call you depressed. They give you antidepressants. They give you drugs to make you positive. So it just kind of reinforces that by nature. And that's why we talk about neutral to upside when the volume is very light. And you can see that for the last 3 days or so. Lighter volume here every day, and today being the lightest as we trade into the holiday weekend. Also, there's usually a concerted effort to want the markets to go up by the Federal Reserve into a holiday weekend. The reasoning behind that is pretty simple. It's basically the idea that if the markets end on a nice up note towards the end of a weekend or a week into a holiday weekend, then you're going to get people out shopping. Remember, think about all those Memorial Day sales you're going to see over the weekend, circulars going out, and big blockbuster sales. Well, guess what? That's going to be a lot better received by the public and the consumer if the markets have floated up into the holiday weekend. Put yourself in the other position. Imagine what the markets would be if we saw, let's say we saw a 300-point down day on the Friday before the Memorial Day weekend. How many people would possibly think about maybe not spending as much over that holiday weekend? So things like this are really important to understand, folks, and it breeds that neutral to upside bias that we see here in the charts. All right, a couple other things to go over, guys. Number one, as you can see, the markets are above support, right, or I should say resistance. There was a little resistance level right here. Yesterday, resistance here, but we have not hit double top yet. All right, if you zoom out, you can see double top right up here. There is a chance that we get up there by the end of the day since we still have another just under 4 hours to go before the markets close. And it's only really, let me just get a quote on that, 190.40 and change. So you're only about 25 cents away from that level right now. So, on the spiders, that's about 2.5 points on the S&P. Very small move. And I wouldn't be surprised if we end right there on the trading day. All right. In addition, the markets are setting up to close right at a new all-time closing high. All right. Even if we don't take out this high, the markets on this day that it popped closed all the way down here. So we're right now trading at a new all-time closing high. And my thought process is this. If you look at the S&P 500, all right, where's it trading? Right now, it's trading at 1,899. 1,899. That's where the S&P is trading. Another thing that generally the markets will do going into holiday weeks where there's going to be a lot of shopping. You'll see on that Friday before the weekend, the market will close above a major number. And we call this the even number. And the reason they do this is because the headline news will pump that even more so. So in other words, you're 1 point right now away from 1900. If you can close above 1900, the media is going to be out there pumping, saying, hey, listen, new all-time closing high, and the S&P closes above the 1900 for the first time ever. Think about those. So then again, think about the chain reaction. You get the media pumping that all weekend long. It's going to make people spend those extra couple dollars, stimulates the economy. So this is what you have to know. I mean, this is kind of some weird thinking process for most people, but it actually is an important, interesting factor to understand going into it. It really actually helps guide you because, going into the holiday weekends here, I had a neutral upside bias for the last few days, and that's exactly what we've seen in this market. So it kind of gives you that step up and edge, I would say, on other traders that don't understand that. All right, what else is going on here, guys? Let's see just what the dollar's doing here. Dollar is trading up slightly on the day. We had a breakout, although no confirmation yesterday. And again, if you look at the chart here, all right, so you had a consolidation underneath this trend line. You broke out, you pulled back, then you broke out yesterday, and it looks like we have a good chance to confirm today, although we'll have to see again where the dollar closes. Short-term resistance is going to be right here, which is the 200 and this little pivot top. So that's going to be your resistance right there. You also have a little gap fill just above that area, but right in this vicinity on the dollar. So the dollar, again, making its way higher, getting some trend change in it. If you look at the dollar here, it broke down, and this was a fake out. All right, most average investors, see how there's a trend line right here and you broke below it? Most average investors, maybe many of you guys watching this video, would have thought that was a real breakdown. It's not. There's no confirmation there, which is a proprietary technique here at InTheMoneyStocks.com. Without confirmation, you have to assume the institutions and the big boys are fooling you, trying to get you on the wrong side of the trade. And if you can't read that, then that's a problem because every day they do this. They pull these shenanigans. And you have to be able to see that. All right. What else do we have going on today? Take a look at gold quickly. The GLD is down slightly. GLD continues to hover in a bearish macro pattern, though it hasn't broken down yet, but nonetheless, that is an overall bearish pattern. USO oil today continuing to move higher. No surprise here, guys. Into a holiday weekend, it's also important to remember that oil generally will trade up, especially once you get into summer. Same thing should happen right around July 4th. Why? Well, the essence of it, if you want to know the basic truth, well, the refiners and the oil companies want to drive the oil price up so they can make more money. They know you're buying gas at the pump, guys. All right, look at when this rally started, basically 2-3 weeks ago. That means from the point it rose up, by now it's fully factored in at the pump. When you go to the pump, you're paying more money, guys. And, it's not some random occurrence that this happens into holidays, especially big driving holidays like Memorial Day, July 4th, these type of holidays. Okay, and again, it's the oil companies trying to squeeze those extra few dollars out of you, shortening up on supply, driving price up. They know you're driving, and you might as well, the way they look at it, as long as they know you're going to drive no matter what, they're going to try to charge you for it. They know on Memorial Day that you're not going to say, oh, well, I'm not going to take out the car. Like, if you already made plans to go visit your family, you're going to do it. So, interesting stuff there as well. All right, what else do we have here? Let's take a look at some other key stocks here. How's JP Morgan performing? JPM is actually down. Please notice that JPM's into the 20 here. But I think it's interesting because JPM, even though the markets right now in the S&P are near all-time highs, JPM isn't even close to its recent highs. And I think this could be something that is troublesome for the market when we get back next week. Right now, the volume is too light for them to care. That's not an issue. But I do think going forward, this could be a big issue in the charts. That fact that these financials are not performing as well. And even look at Goldman Sachs down on the day. So these charts are really, really ugly, guys, and need to be kind of understood as such. All right, a couple other things to go over here on the charts, guys. Let's just take a look at a few major movers. Apple, AAPL up $2. I told you guys literally 2 weeks ago that this stock was going to go to $6.15 to $6.20. It right now is right at the $6.10 area. So it's already up about $15 from where I made that call, which was right back here. And again, consolidation, 20 sloping up, that's a trigger. And again, you're probably, I would say maybe by Monday or Monday markets are closed. Tuesday or Wednesday, you should see it right around that 6.15, at least kissing 6.15, maybe 6.20 by then. All right, and then I think basically the projections are that you get into kind of mid next week. Monday the markets are closed. Tuesday dead volume, assuming no geopolitical issues. Wednesday volume starts to reemerge. Thursday it gets a little bit better. Friday's light again, but right around that later portion of the week, you could start to see some weakness emerge. Although again, we still see some weakness, but I think we see more so choppy weakness before July 4th, and then once you're past July 4th, you'll start seeing bigger downside. Okay. Let's take a look at some random tech stocks. Cree had a great day yesterday, small update today. Twitter continues to be weak here, although the Twitter chart, in my opinion, continues to be a slightly bullish consolidation pattern. All right, you can see it really had a weak showing, had a great showing off the lows yesterday, then came back in. I think there was a rumor there, but this is the pattern that I'm paying attention to on my Twitter. So right here is the trend line. I actually think I can adjust that trend line down. I want to put it to this new high right there. So that's your new trend line right there that you want to pay attention to. You want to see a break above that, and then that would be a breakout. But notice the sharper bounce and the slow fade on light volume. That's actually what we call a bullish consolidation pattern, and should be watched. Now, granted, the chart trading today weak compared to the market. Yesterday, same thing. Not a good sign for that. But the question is, does this pattern eventually play out? Does it get strength? Does the news come to reinforce the price action in the chart? And that's what will happen oftentimes is where the chart will be telling you something, but it doesn't make sense, and then randomly some news will break and it'll shoot up $2-3. Now it may not. Basically, the way you know it is if it ever takes out this low, that would be a negation of it. So you have a couple things to watch on that chart that are interesting. What else do we want to look at here? Facebook today is up slightly on the day, 58 cents there. So Facebook continues to kind of show some signs of strength. If we zoom in, you can see it really, since yesterday, it just chopped sideways, down, up, down, up. It had a good rally before that, but now I guess you could call it a little on the weaker side. Even though it's up today, just the price action is very sideways while the markets are inching up. And let's take a look at some other stocks out there. Hewlett Packard had earnings yesterday that were bad. The stock dumped out. They reported the earnings just before the close. Then this morning the stock rebounded and is actually up $2 on the day, or 6.5%. Just a total yo-yo here. And to be honest, the earnings were not spectacular. They missed on revenue numbers, but Meg Whitman has done a great job of coming out and calming the markets. Plus, Hewlett Packard is looked at as kind of like that old school safe stock still, so you're still seeing money flow buying it on the dips. They haven't abandoned the safe stocks just yet. Another stock that's getting pounded today, ARO. Take a look at this, Aeropostale. And this one's just, I mean, this stock is just going south and south fast. I don't know if this one will be a recovery. It might be a buyout at some point if someone else wants to take a stab. But look at this chart. Just literally a year ago, this thing was $16. Now it's $3.50. I'm not going near this by any stretch in the short term. Okay? Let me just see if there's anything else out there. Some biotechs are up today. Solar stocks are kind of mixed. In fact, First Solar is down today. First Solar, let's just take a look at that daily chart here. Yeah, I mean, First Solar's had a small bounce. It bounced off the level I told our members it would bounce off, which was this pivot high, this pivot high. I have to say I think it's going lower, though. I think the fact that the 20 is sloping down, the bounce has been so weak, it's going to most likely meet somewhere in between here and then start to head towards the 200. There's a gap fill right here at the 200 too, and I think that's your final resting place before a more extended bounce potentially. All right. I think that's about it for now, folks. I'm not going to tell you too much more, but I'll give the update to our Research Center members in the technical daily analysis video tonight. And bottom line is, market's a good trading market. It's very choppy right now. The float is continuing on the spiders. Remember, watch for a close above 1900. I would almost put money on it as a bet that that's where they're going to close it. You can see how they're keeping the market up near the highs to do that final push towards the end of the day as well. And again, the media will have a fun time with 1900, new all-time closing high. They'll pump it up for the weekend. The consumers will be enticed to spend more money, and that's exactly what the Federal Reserve wants. Trust me on that one. All right, if there's ever a time the Federal Reserve gets involved in this market, when the market's not crashing, when they don't have to bring out the PPT and plunge protection team, not the PPT methodology, which is what we teach, the proprietary methodology, but that'll be this time. This will be the other time that they bring it out because they know that everything they've done is to try to stimulate the economy. How do they stimulate it? Get people spending money. How do they get people spending money? Make sure the markets end into major holiday spending sprees, high and at new all-time highs above key levels. All right? Interestingly enough, the Dow's at 16,600 right now as well. So it's kind of right in an even number area as well. I wouldn't be surprised if they close that above 16.6 just to get that highlight too. Think about that. 16.6. It's pretty nice sounding. All right. On that note, folks, I'm going to step aside. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial. Profit with the pros. We're going to give out more trades before the close today in the research center. If you want those trades, join up. Talk to you soon. Take care.